Well, all right, guys. So this is going to be a back testing session on a trade that I got in this morning that I successfully won in the New York session. This was off of NAS100. And as you can see, NAS100 dropped extremely hard this morning. And I was able to catch pretty much the beginning of it and make my money and jump out. So I want to show you guys that process on how I got to this point. I want to show you my top-down analysis and why my top-down analysis helped me to actually get in at the right time. So typically when I get into the markets, I'm going to turn off all my indicators first. And then I'm basically going to, matter of fact, let me do this. Let me save that, and then I'm just going to erase everything, okay? Then I'm going to turn this off. There we go. Right? So now we have a naked chart, okay? So now, typically the very first thing that I do, so when I first marked up this chart, price was actually here, okay? So how did I get to this point? Basically what I do is I follow a couple steps and rules. So the very first step that I do is mark up market structure from the 15-minute time frame to the 4-hour time frame, okay? So that's what I do. So what I'm going to do is I'm going to go all the way back in price. The reason why I do that is because when you go all the way back in price, you get an idea of what price more likely is going to do in the future that it did in the past, because price typically repeats itself if you pay attention. So I'm going to go back as far as I can on price. And then I'm going to go ahead and get it going. Let me see. Give me a second here. Now, we see that this is how as far back as price goes. So then what I typically do is I go ahead and put a vertical line here, okay? Then the next thing I do is I basically mark up market structure off of strong liquidity areas. What do I mean by liquidity areas? This is areas where institutions, hedge funds, or whoever are behind these prices or these orders typically test areas and process these orders to make price go up very high or very low, okay? So as you can see, price bounced off of this support at least 2 times here, went up, came back down, tested that same area a couple of times, and then it finally just pushed it all the way up, all right? So these are areas that you constantly want to look for, because this is where the biggest and most consistent moves happen. And in order for you to be a successful trader, you need to get in the most consistent moves in the market. That's what you want. So typically I mark up market structure from the 15-minute to the 4-hour time frame. And each time when I do that, I mark up market structure with my horizontal lines. Then I go ahead and mark it, and then right behind it, I draw zones right behind these lines. And that way I can see what price are interacting with these zones. It's more accurate. So that's what I do for the 15-minute to the 4-hour time frame. Just pretty much the same exact process. Okay. So I'm going to do that here. Now, what I'm going to do is move on to the 30-minute time frame, and I'm going to do the same exact thing. So I'm going to go all the way back in price again, and I'm going to continue where I left off. As you can see, this is what I marked up for the 30-minute. And as you can see, this is where I drew the vertical line, okay? So now I got to go to areas where it hasn't been marked up yet. And you can kind of see that here and here. So I take my horizontal line again. I'm going to change this to green. because the green horizontal line represents the 30-minute time frame for me. So I put that there. This is the highest, this is how high price went before starting to go to a downtrend here. And then this is the lowest point at this point. And then I want to go ahead and draw zones here. Okay. And I want to change it to green. Change the zones to green. All right. And then basically I'm going to look for other areas where it needs to be marked up as well. Matter of fact, I'm probably going to go on ahead to the 1 hour time frame and just repeat the process. And so as you can see, this is where I left off here. Actually, I forgot to put a vertical line for the 30-minute. So that was this is where I was going to put the vertical line at right here. And then I'm going to mark up down here the 1 hour time frame. So there's some good liquidity here. Price bounced off of this and went down heavily. So you kind of see that down here. I'm going to change this to red. And then I'm going to also put this area here. Area down here, and then there's another one. You know what? Let this one go down here. Pretty much accurate. And then I'm going to draw my zones on these as well. And we're going to make this red. Right? So now we can see prices interacting with these zones perfectly to get an idea of what price is trying to do. Probably going to go ahead and maybe mark up these as well. And then I'm going to mark up that. So right. So now that we got this marked up, we're going to move on to the 4 hour time frame. And so these are all the areas that I've marked up so far. I have to put my vertical lines, but it's okay. So then at this point, I'm at current price. And then I'm just going to actually just draw a zone down at here. And then I'm pretty much done. So then what I do is I go all the way back to the 15-minute time frame. You can see how well we drew this. Prices interacting with these zones perfectly. Could have drawn a zone here. So I might actually do that. Right. So now we're at current price. So then now we're done with the very first step. And typically what I do is the very next step is I identify the trend at current price. We can see that price is clearly trending down because it did this very huge down move to the downside. And it created insufficiency or imbalance in price as well here. And then prices continue to go down, and then it came back and tested this area, and it looks like it's pushing down more. So typically what I did was drew a trend line here, and then I pretty much labeled it. There's trend line. All right. Then the very next thing I do is I basically start dealing with my indicators. I look at the most recent high, most recent low, and I set my break and retest lines, which I call my X factor lines. That way, if price break and retest this when it's ready, then I'll know when it's the proper time to buy or sell. This really depends. So I'll probably just put one here, right? Now, once I'm done doing that, then I turn on my order block indicator. And basically I trade imbalances, okay? Imbalances are when banks and hedge funds put in these large orders and it makes price spring up extremely high, like in this case, or extremely low and very, very fast. So it creates a lot of imbalance in the market because, say, for example, you see them put this order in here. They made a lot of money off of this order. And this was a buy order, but there was a lot of sell orders that were left unfulfilled. So they got to come down and mitigate this area and basically sell it off in order to save money so they don't stay in the hole. And then once they fill that imbalance, then they're going to drive price basically to the next area where imbalances are resulted. So like, for example, here, when I started this session, you can see that price dip down. That's because they had to fill this imbalance here. You see these gray lines. Now, once they mitigate this area, there's a possibility that they might drive price down a little bit more. And then eventually they're going to decide to bring price back up because now this move that went all the way down here earlier created imbalance in price. Now they got to actually bring it back up to mitigate and save money again, and then possibly bring it down. That's why you have pullbacks in the market, by the way. So when you know how to trade imbalances in the market and know where they are, and especially you know where order blocks are, now you're starting to think like the banks who put large money in these markets and hedge funds and whatever the case may be. So that's how I do that. So, so in this case, what I did is I set my take profit lines and basically turned on my Delorean EMA indicator and went ahead and traded everything. Now, what I'm going to do is I'm going to actually go all the way back. I'm going to undo everything and go all the way back to the beginning where I had everything marked up. And I'm going to show you how I won this trade. So just give me a couple minutes here to do this. Bear with me. Let me do something here real quick. So now, as you can see, everything is drawn up. Now, these red lines here, these blue lines here, they represent order blocks. The reason why I pretty much had a 90% accuracy as far as NAS100 selling was because of this order block here. This order block was previously caused price to go down to here, then they pulled it back. And then I said, yeah, price is grabbing a lot of liquidity here. I see the order block is going to drop. So that's the reason why I ended up selling NAS100. Now, what I'm going to do is, now that I have everything marked up, I'm going to show you guys how I won this trade. So we're going to actually play the replay tool here. So price kind of came up a little bit, kind of retested this area, this liquidity area, which you see another order block was initiated. So it looked like price was going to go up, but it slowly started to retrace and turn into a sell. So I didn't sell yet. No. Actually, I did sell because price kind of came out here. So I kind of came in. So I was in a little bit of drawdown. But price started to come back. And then price started to push. And you can see it. Matter of fact, I'm going to try to zoom in on price so you guys can see it. Let me do that for you guys. Hopefully you guys can see the screen a little bit better. But like I mentioned before, price started going down. And then here, that's when I started getting the profit again. And then price pretty much came down to this point. And I believe this is where I actually got out of the trade because I actually made my money, or at least my first partial trade was closed. So what I'm going to say is at this point, over 680 plus pips were smashed in NAS. So I'm going to make a note here. I'm going to say TP1 smashed is equal 680 pips plus 680 plus pips. So basically, I made my money at that point. I want to move this up here so that was not too much in the way. Well, I could put it right here. All right. So now we see how far price went. Now let's see what else price did. So price smashed my first take profit here. Actually, my first take profit was right here. So I was wrong. So my first take profit got smashed here. That was over 1100 plus pip smash. So let me change that. There we go. And then price went down to smash my second take profit. But I was already out of the trade, but these are take profits that I set. So then I'm going to say TP2 is equals that equals over 2100 plus pip smash. So I'm going to put that over here. Oh, wait a minute, I'm tripping. This was take profit 2 here. So let me go back up here. That's like the first time. Over 1800 pips smash. Pips. All right. So that's the deal with that. You say my progress. And so then, of course, price ended up dipping even more. Well, it retraced a little bit more, and then, you know, it just decided it came back up to mitigate that area. But see, all this created a lot of imbalance here. So they had to come back and mitigate that area to be back into the positive again. But then I believe price, oh, you know what? Price didn't go further, okay? So, but this is how I caught that move. All right. Now, I'm going to share my phone screen so I can show you guys that I actually made this in my live account. Let me see if I can share my phone screen and show you guys. For some reason, it's not allowing me to share my phone screen. So let me try something here. Bear with me.